Welcome back to Be Productive. I'm your host, Clara Capano. And today we are talking about the D word. That's right, debt. We have to pay attention to this because as a business owner, you're always going to have debt. And it doesn't always have to be viewed as a negative thing when we are doing it with purpose. So, to help us with our conversation about starting to analyze what is good debt, what is bad debt, and how we make sure we keep track of it all, is my dear friend, Nora with Nourasbooks. She has over 20 years of experience in the bookkeeping and accounting background. So she's going to be able to walk us through this. So Nora, welcome to the show.
Thank you. Thank you for having me. Always pleasure to be with you.
Yes, I love it. So let's talk debt for a minute. Debt is out there. It's inevitable. If you want a business, you've got to invest. Sometimes we have to go into debt. But how can having a bookkeeping system or a bookkeeping expert like yourself really help us as business owners to manage and control so that we're having good business debt?
Sure. So first, in recording those debt, you want to make sure you're recording each debt individually, even if it's coming from the same vendor. For example, you're taking some loan from Fundbox. You have different withdrawal. You don't want to record the entire thing, just Fundbox, and all the debt from there, from the, in the same payments, because you want to be able to track which one you paid before. You want to make sure you're recording interest. You want to make sure, because interest you can deduct from that, and it's going to help you for tax purposes, because we hear on the news like, okay, this company or this person do not pay taxes. Well, they do pay taxes, but they use tax law on their benefits. So because they leverage debt, debt is really important for the growth of the business, because you won't always have that cash flow going on to acquire a new thing in your business, to maybe hire a new person. That's going to be very important for your growth. But before you do anything, before you take any debt, you want to actually analyze your ability to pay. And when I say your ability to pay, not only with what you have right now, but what you're going to have after, when you invest this debt, because sometimes you can get maybe 10 times of the revenue that you're having right now. So you want to analyze to the best of the ability and make sure you monitor your cash flow 10 times more if you did not have a debt, because that can be very great for your business and you can grow faster, but also it can break your business very fast if you are not careful. And I would say one more thing for that: make sure you acquire debt when you can, even if you don't want to use it now. So you don't get to the point that you're not able to get any debts, but then you're stuck. You don't want to lose your business. So make sure you be smart about that, and having a financial advisor who knows how to deal with that, and a great bookkeeping system that's going to help you with that big time.
Right. And like you said, you want to be smart about it and you want to be careful with it because debt can accumulate and then we can find ourselves sort of underwater with everything we're doing. So, what are some of the strategies that you really help your clients with to make sure that their debt is not accumulating out of control?
So you want to keep an eye on that balance sheet, a really close eye on that, because you want to make sure, this is where, like I said in a previous episode, that balance sheets are where it shows the liability. So any debt is going to show in a balance sheet. You want to make sure it's not going out of hands. You want to make sure you are analyzing anything before you take any new debt. You're looking at, what are you able to pay this debt? Like, what do you need to be doing? Do you need to make more sales? Probably. So make sure you are able to make all these payments coming up. You want to really monitor everything's very close. So you cannot really go 2-3 months without looking at your financials. And you want to be careful also not to record the interest, for example, as a debt payment. You want to distinguish that, because paying back the loan or the debt is not going to be tax deductible, but that interest is, and is going to help reduce your tax bill big time. But if you don't give this information accurately to your accountant who are doing your taxes, she's not going to be able to tell this is what happened, because she wasn't there with you,
Right.
unless she was doing your bookkeeping and you're giving her the accurate information and the reporting that she required for her to do an accurate bookkeeping.
Yeah. And there is a science to it. Like you said, you have the debt, but you also have the interest, which can offset, some of the tax consequences. So again, you have to be able to know, and they're constantly changing the way that we can do it. So you really need someone looking out for this for you. One of the things you talked about earlier is the idea of knowing when to borrow, knowing when to repay. So how can real-time bookkeeping help us as business owners to sort of gauge when is it time to borrow, when is it time to repay?
So when you are in your best time and your business, you want to see like, okay, what's your future plan? Do
Mhm.
you really need what's your future income? For example, as tax professional, for you have, if you're just doing taxes in your business, you have seasons. So you have that like in the beginning of the year, and then when people come to do the extensions, this is like when your cash flow. Summer is very dead place if you're not doing any other services other than taxes. So you want to make sure, do you have enough cash flow to help you run your life and your business in that time? If not, you might want to consider acquiring debts in the time that you can borrow, but you don't want to do it to the place like you cannot actually pay back. So you will have to monitor and do that analysis to make sure you still are able to pay it back. And when you do that, you want to make sure you don't actually kill your future profits.
Yeah.
So, oh yeah, I'm gonna get this money, I'm gonna later, so I'm gonna pay it back, but then you are left without paying yourself or paying your employee. Then you're breaking your future business. You don't want to do that. So that's why you have to be really careful in doing this. And like I said, again, do that when you can, but be very, very careful with it.
Right. I love this. Being productive all comes down to making the decisions, the quality decisions that we need as business owners. Now, my circle of genius rests in how we invest time. Nora, your really circle of genius is how we invest our money. So making sure that, we are doing these things, again, thinking at it strategically. Because everything is an investment. It's an investment in our business today, but also an investment in our business tomorrow. So we really want to make sure that we are working with experts to guide us so we are making those quality decisions. So now, Nora, if somebody is sitting back and wondering, I don't know where I am with everything, they may want to seek out your guidance. So tell us where people can find you. So if they want to really talk with an expert like yourself to guide them, they can have access to you.
Sure, I would love to help you guys. So you can go to nourasbooks.com/contact and book a Zoom call with me or someone on my team, and I would love to help you with that.
Beautiful. All right, everyone, you got to watch that bottom line. Again, you've got to understand part of growing your business is going to be taking on debt, but be smart about it. Understand how that debt is going to impact you in the short term as well as in the long term, and come up with a system and a process. Let your bookkeeper, your accountant, guide you and walk you through the right strategy to keep you afloat long term. Stay tuned. We'll be right back for more of our discussion on Be Productive.